What's up, Mortgage Coach community? Dave Savage interviewing Terry Heffner. What's up, Terry?
How are you, man? Good to see
I'm
you.
doing I'm doing good. So are you in the Boise, Idaho market?
Yes, we're in Boise, Idaho.
Boise, Idaho. Well, congratulations on a spectacular 2020. I am interviewing and I reached out for you because I was looking for folks that went from white belt to black belt in a single year. You went from quoting rates with a fee worksheet in 2019, and it looks like this year you've really doubled down with Mortgage Coach. And I wanted to just hear the backstory. So why don't you start with just anyone who's listening and they don't know you? I know everybody at Guild probably knows you, but for folks who don't, tell us a little bit about your mortgage practice.
Yeah, so when I got out of college in our area here in Boise, Idaho, I got into the real estate industry. I was a licensed realtor, worked at a title company, and then I got into the mortgage business, and I've been doing that for over 20 years. And early on, just really learned how to take care of my database from day one and build a database and kind of grow within a community. And so I've always taken great pride in the fact that we have a great deal of our closed loans come from our past client database, from our loyalty program. And so that's kind of how we built our business over the years. It started with just myself and my number one gal, Amy Johnson. And now we have a team of 6 of us loan officers. We basically doubled our business from 2019 to 2020. And like I told you before, it was a gift. We were in a great position. We, had a great structure to our team. And then along comes this perfect storm where everyone is at home, working from home. They're answering their phones. They have the time to deal with a refinance. And so we really capitalized on that. We capitalized on, utilizing Mortgage Coach. We were an early adopter with HomeBot and other AI types of platforms that allowed us to really stay in touch with our clients. And so we just really capitalized on that, and we're able to go from 78 million in 2019 to 152 million in 2020. And we closed 380 refinances, and we did over 446 TCAs, which were primarily done with an individual on my team that is charged with dealing with our what I would call in the money leads, or our database leads. So he's the primary individual that's performing the TCAs and pushing those out to clients. And we had 721 TCA views. I didn't even know there was a black belt until you told me, but you know what? Right on. That's awesome.
Love it. Love it. So how many total loans, how many families served in 2020?
545 in 2020.
And how many folks on your team?
So myself and 5 other licensed assistants.
So guys, that's 100 loans per person, highly effective team. And, congratulations to you. I mean, I'm sure it's a financial windfall for you, for your team. And then for all the families that you served, it's fiscal stimulus. You helped them lower their monthly payment. And you probably also showed them how they can pay off their loans faster and get out of debt faster. So for any new loan officer that heard this, I hope you heard those first words that he said, like, I got in this business and I really focused on serving my past customers, like building clients for life. And you could just feel like this is a guy that you like him, you trust him. And this is what happens when you spend a lifetime helping people in a small market. I mean, that's a lot of production for a market your size. Are you one of the market share leaders in your market?
Yeah, I would say, that we are. Guild is, we have all the same competitors that a lot of the other larger markets, larger than ours. I mean, Boise, Idaho is like on every single top 5 list in the country, right? As far as people move into this area and growth. So we have our fair share of competition. We have our fair share of constricted market where, we don't have enough inventory. We have a lot of the same problems that everyone else is dealing with. Our average loan amount's around 280,000 and growing rapidly. But, I think in line with the 65% of our loans that closed in 2020 being past clients, our new loyalty or VIP program that we instituted has over 350 of our past clients have done more than 2 transactions with us. And that's because we're doubling down on those that have done business with us before, but even doubling further down on those that have done multiple loans with us. So
Love
we've kind
that.
of created what I would call a loyalty program with those folks.
Well, congratulations. That's just phenomenal success. Now, why Mortgage Coach? Why did you decide this year? And when did you decide, like, hey, we're going to start doing this? It makes sense. I'd just like to hear that. Why Mortgage Coach and how you implemented it in 2020?
Yeah. So, I've always tried to position myself as someone that is kind of a solutionist, someone that kind of helps people think outside the box. That's been my differentiator. I want to be the individual in the marketplace that is, people are coming to help structure deals and try to figure out a solution and that type of thing. And so, I've always approached, whether or not someone should do a refinance, I've always approached that on whether or not it makes financial sense. And I've never really defaulted on, hey, let's reamortize this over 30 years. You're going to save $200 a month, slam, bam, thank you, ma'am, type of thing. Because that's just not the right way to do it. And so I think, the reason Mortgage Coach is that, it allowed me to automate a little bit. I was an early adopter with HomeBot in this area. And so the integration with HomeBot, I think, was a win-win for me. And then seeing you at our leadership conference, seeing Amber Kovarik talk about how she used it, I think that kind of inspired me to say, you know what, we might be able to automate our refinance business a little bit by utilizing this tool. And I think it allowed us to, just the way that we had the division of labor on our team, it kind of allowed us to get more information out to the masses quicker and essentially easier to read information that they could decipher quickly. We knew when they were reading it, it would prompt us to give them a call and check in with them. So, I think all of those things kind of converged on this like unprecedented year. And we definitely are going to look for new ways to, I would imagine our numbers are going to be similar, if not bigger, with Mortgage Coach in 2021. It just kind of depends on what the market brings us. But, we're sold on our ability to reach the customer with it. We're sold on the client's ability to kind of, see for themselves where they're saving money, what their options look like, and all the technology that's embedded in it, right? The ability to look at it together, and it's a little bit easier than just sending out 4 or 5 net sheets and handwriting on them how much they're going to save and this and that and the other. It's a real differentiator, and not everyone in our market's doing it.
Yeah, well, I love that. Well, I heard you. First of all, you can tell you're competitive. You can tell that you have a heart of a servant that wants to teach people and help people make better decisions. Are you providing a Mortgage Coach on both refis and your purchase scenarios at this point?
No, we are not. No.
Got it. So
and that might be something because of our, commitment to do more purchase business in 2021. It might be a great way for us to, to stand out on the purchase business. Honestly, we haven't, other than our business planning sessions and putting together our plan for 2021, we haven't had a lot of time to sit down and strategize because we've been so busy and, just kind of flying by the seat of our pants. And I'm really, really grateful that we had Mortgage Coach, in the door, and Marty Luckenbach on our team was, well versed in it. by the time things just started taking off, because, it's kind of like, you got to dig the well before you get thirsty. Right. And so, you don't want to try to learn Mortgage Coach and how to incorporate it into your business in the middle of a storm when things are going crazy. And so we were really fortunate that we adopted it when we did and started working on it. And we've only scratched the surface. So.
No, well, I would tell you there's even more time savings and value when you give Mortgage Coach on a purchase. I actually got this email this morning at 9:18 this morning from Jeremy Forcier, who has done a lot of TCAs, and it was from a realtor, and he actually said to me, "This is why it's so important to include a realtor on all Mortgage Coach presentations." And the realtor said, "Thank you for sending that video. It's not only helpful for my buyer, but also for me, and I appreciate that." And then went on to say, "Hey, I'm just confirming closing costs this," but there's another layer of value. It's valuable for the consumer so they understand their options, and it is valuable for the realtor because they understand what was presented to the buyer. And then it's also valuable to your team that when you do that total cost analysis on a purchase, it helps with the handoff. So that when you give it back to your team, they're like, "Hey, not only do I know the transaction, because they've got the transaction, but now I know how it's positioned and what their options were." So anyways, something to think about. And if you'd like me to assign a success manager to help you with that workflow, let me know. I'd love to do it. Well,
Yeah. I mean, I think that, one of the things that we've discussed as a team, and I think that every single, loan officer in the country is trying to kind of navigate right now, is how to help your buyers stand out in a competitive market. Right. And, not everyone can pay cash. And if they're paying cash, they're not doing anything for us. And so if we want offers to stand out in a competitive market, we're looking for ways to do that. And it sounds like, Mortgage Coach could, help us provide that as well.
yeah, that would be another piece. And actually, I did a call with Jeremy. It was actually one of the top 10 videos of last year. And I think it was Jeremy Forcier's 2020 strategies. And in that call, he talked about how he's using Mortgage Coach at the point of sale, but he shared Mortgage Coach kind of ideas and other ideas on how, because it was super, at the time he was doing it, the purchase market was super competitive. And it was, how is he making his offer stand out? So anyway, something to think about. Well, let's stay focused on you and what you're doing and how you've made this transformation. So you mentioned, I think you used the word solutionist. I've always wanted to be a solutionist. And I would love to hear, knowing that you're going to give a total cost analysis to a family, what does that sound like to the borrower? How do you frame that? And I know you're probably not a script guy that says the same thing every time, but I'll bet you do have some talking points and you do have some words that you use pretty consistently when you're positioning yourself with a family. It's like you're not your average loan officer, and there's some words that distinguish you. What are some of those words, and what are some of those phrases that you use a lot?
Yeah, I tried to, and it really doesn't make it that difficult when you approach it this way, but I keep it personal, and I try to stick with, some of the basic questions out of the gate, because it's really going to guide the whole refinance conversation. And so I want to know how long they plan on staying in the home. I want to know, about their family. I want to know about the growth of their family, and whether or not they're going to turn the home into a rental, or, all these types of questions. And so we dig into that early on. And then, we take a look at their current loan and see where they are. So if they're 5 or 6 years into a 30-year fixed mortgage at 4.25%, and they're looking to do a refinance, I really kind of am guarded against going back into another 30-year fixed mortgage. And so we try to present those options to them, not only on a TCA, but just in the discussion. In other words, is the only reason they're refinancing is to save money monthly? And if that's the case, we can go down that path. We can go down the path of, re-amortizing out to 30 years because life has happened for them and they just need to not necessarily worry about, stretching back out to 360 months. They need that extra money in their pocket. So, sometimes you go that direction, but a lot of times I like to be able to show them a 25-year option, and a 20-year option. Maybe we can save them some money monthly, but also save them 50, 60, 70, $80,000 over the life of the loan. So we focus on, what are they going to save monthly? What are they going to save in the first 5 years? Because, that's kind of our benchmark. And then the life of the loan. So we look at those three kind of viewing points. And then that kind of takes us, where we want to go in the consultation. And in having the TCA and being able to send that out and letting them look at it on their own accord is one thing. But if you can have that discussion ahead of time, and I can give them my personal opinion on why I don't think going back to 30 years would be a good idea. If they, a lot of times if they want to go to a 15-year mortgage, I like to find out, are you maxing out your 401k? Are you doing other things that you need to be doing? Because I've done a number of 15-year mortgages and people call me back in 2 years and want to go back to a 20 or a 30 because they've just bit off more than they could chew in the way of a payment. And so I want to, refinancing over and over again isn't a really great, financial objective. So I want to make sure that we don't get them, going down a path that isn't a well discerned path for them.
I've been doing a lot of thinking, and I'm currently working on I don't know, white paper, an article on what are going to be the 6 most important strategies of 2021 for loan officers. And I personally think debt consolidation loans and home improvement loans, and I put those in kind of the same bucket. I'm going to call it a financial makeover for a family, where you can talk to a family, what are your goals? I love to hear that you're asking, like, what are your family growth goals? What are your real estate goals? I think we're going to see more people wanting to buy a second home so that they're going to be living out of their home. I think we're going to see a lot more people wanting to, significantly remodel their home. More people are working at homes. They're going to want a home office. They're going to want a home gym. They're going to want a better kitchen. And they're going to want to consolidate debts. So first of all, do you agree with that, because equity has gone up? I mean, the average stat is that the average equity is like $180,000 in equity, and last year it was like 150. So if anything won in 2020, equity won. And I think there's another change that people want to have more money liquid, so if they could take cash out and they could fix up their home and they could reduce their debt. Do you agree with that? By the way?
Yeah, I think we need to be careful as advisors. I think we need to be careful that we're not, giving them bad advice about paying off debt. Sometimes it looks and feels good because, your total monthly payments go down, but, I'm not always, a big proponent of paying off maybe a car loan at 2% or 3% or 4%. That is going to be paid off in 3 years and then amortizing it over 30 years. But I will say that to your earlier point, the large amounts of equity that homeowners are sitting on right now are going to be a real critical piece to focus on, not just 2021, but going forward, because as we've seen so many prices appreciate, a lot of people can't afford to sell their home, or maybe they can't even get it done strategy wise because they got to make a contingent offer. So they can't afford to sell a home and buy another home because the prices have gone up so much. So they're staying put and saying, well, maybe I want to take 50,000 out and redo all my bathrooms and my kitchen and kind of make it the home that I want it to be, or, turn, the unfinished bonus room into a bedroom. So these are things I think we're going to see a lot of in the next few years because of that equity that you said that everyone is sitting on. And I think you're also going to see people, as you kind of alluded to, people are starting to work in their homes more, especially with the pandemic and so on. And so I think a lot of people are wanting to get away and get out and buy cabins, or maybe purchase a bare lot somewhere to, build a cabin on eventually, buy investment property and that type of thing. And so they're tapping into their equity to do that. And I think if you're going from a 3.5 or 4% rate and you're going down into the twos, that's a good solid reason to refinance.
Yeah. Well, let me show you a new feature. It's actually been in beta, and it's live today, by the way, Terry. So
Okay.
today is the first day. Anybody that's watching this on Facebook Live right now, this is live in your advice engine today. If you're watching this on a video on our YouTube channel, it was live days ago. But I'm with you. When it comes to refinancing debt, we were the first to put in a true refi analysis where you could put in, what's their loan? When did they get their loan? If they got it 5 years, let's make sure we're looking at the refi based off of they've been paying down this loan for 5 years. So our team has worked on pretty much the ultimate debt consolidation analysis. There's never been anything like this. Forget about the mortgage industry, in fintech. There's no such thing where you can put in someone's debt, their mortgage, you can put in all their different debts, all their different interest rates, and really show them the details, and then show them, short term, what does it look like to consult and do, and long term. And then if you were to pay off a car loan, which I'm not here to say you should or shouldn't, I would just want to provide you the transparency of it.
Sure.
But prepay that loan, like get out of debt as fast as you can. And when you have a debt consolidation analysis like this, it can really break it down for a family so they can see that, hey, by consolidating debt, this is the long-term benefit, the short-term, and you might make the short-term 3 to 4 years, and you might make the long-term, 7 years, but at least there's now a true debt consolidation analysis and some new features in Mortgage Coach. What do you think of that, Terry?
That's
You like
awesome.
that?
I think it's great.
Yeah.
You're constantly having, during the course of a refinance, obviously the cash out refinance, you're having that discussion. And there's nothing I hate worse than doing a maybe a rate and term refinance and then having someone call me 6 months or a year later and say, they want to do another one because they need to pull some money out or something like that. And so I think giving them as much information up front and asking all the questions, I think is that's our job. It's super easy to just take a rate and term refinance and just slam it through and get it done and get your property inspection waiver and get the loan done. But I think the individual that takes it a step further and asks questions, do you anticipate that you might need a new roof? Do you anticipate that you might need new appliances or anything like that in the future? And obviously the client's going to look at you and go, what are you talking about? But that's the opportunity to say, well, this is a good opportunity to use this equity, I just am in the middle of doing one with a client right now that put, all new windows in their home, $25,000. I just think that's kind of incumbent upon us as the mortgage advisor to ask those questions versus what's your payoff? Let's slam that through. And I think it builds credibility, and I think it's the right thing to do to give them good advice.
Cool. Well, I'm going to show one more idea. Then we'll go into wrap up mode. By
Great.
the way, Michelle Castle just said, OMG, another guild fave. She said some really nice things about you. So a true rock star in the industry, according to Michelle Castle, FYI.
Well, I have to say that I've always agreed with Michelle.
So, and you did a mention about Amber Kovark, and I don't know, I interviewed her on YouTube. She was one of the top 10. The interview that we did on this was one of the top 10 of last year. She also shared this idea in the modern mortgage experience. But one of the important questions she's asking every refi is the house still working for you? And I think it's important to note for everyone listening to this, when she asks that question, she asks the question, but then she puts her personality around it. She puts the time in the market. She puts some local expertise around it. She put some color around it so the client can think,
Mhm.
and some leadership. And then did you see that? Have you heard this or seen what she did with a refi versus move up, Terry? Or is this the first time you're going to see it?
First time I've seen it.
Okay, so check this out. So this was a family that said, you know what, we wouldn't mind a better room in another school district, but they came to her for a refi. And so she said, well, the refi would lower your payment by 322. She said, now this was a client that qualified for 5% down. And she said, well, you could do the refi for 322. You qualify for 5% down, but your payment's going to go up $507. Now, this was also a family that had $120,000 in equity if they sold their home. Remember, guys, that's under the national median. The national median now is 188. So there's a lot of families out there with $125,000 in equity that, that don't know they fit within this profile. And she said, well, you know what you could do? You could buy the new home, non-contingent, get right in, sell your other home. It's a hot market, easy to sell, and take that 125 and recast your mortgage, and their payment would go down to by $164. So you could do this. They, by the way, they were like, heads were nodding, I would imagine. And she said, or, and this is what you could do with Mortgage Coach, guys, you could sell that home. You could take that 125, and they did have an investment advisor. And at 6%, you could invest that money. And guys, she said this is what they did. And I don't know if they had finished the whole transaction, but this was enough information for the family to go, oh my gosh, we've got two great move up options. And one of them could increase our cash reserves by 125,000. So we can have access to that, which I think post COVID, more people are going to want to do that. And because they bought a bigger home and they believe that it's going to appreciate, it's almost $400,000 in net worth over 15 years. And they got their dream home. And then best yet, guys, she got to bring this back to a realtor and say, hey, would you like to list one of my clients wanted to refi. They want to, do a move up listing and a move up buyer. So what are your thoughts on that, Terry? You like that idea?
Yeah, no, I love that because, like I said earlier on the call, right now, loan officers are looking for ways to stand out, and they're looking for solutions for this tight inventory market. And giving someone a visual like that and giving them options, so many people get so discouraged because they just feel like they don't have any options. They have to sell their home in order to buy another home, or they feel like they have to sell their home to buy another home. And they get discouraged and they decide to never even put their home on the market and just stay put. So if you can show them something like that and say, you know what, you not only have an option, you have a couple options. I think that's a great tool.
What about the idea of having that conversation with real estate agents and saying, hey, can you think of anyone that's got more than $100,000 in equity that a move up analysis might help them see a better way? Do you think that would be a good real estate agent conversation?
I do. I think for the right realtors right now that kind of get it, as we all know, I think that real estate agents need to stand out as much as lenders need to stand out. So I think it's a great, a great tool to take to them, and maybe give them a little demo and show them ways that they can prospect versus mailing postcards to neighborhoods and stuff like that. They can actually call their clients and have a meaningful discussion and show them what options they have with their equity.
Well, when I labeled this call and I pushed it to our Facebook group, I called it going from price to advice with Terry Heffner, but I'm going to call it clients for life, because it was pretty obvious from literally the first words you said when you described yourself that that's the game you've been playing for your whole career. Is I want to meet people, I want to serve people, and I want clients for life. And here you are, doing a ridiculous amount of volume, over 500 families served in 2020. So I think that's what really distinguishes you. So before we wrap it up, I would love to know if, knowing what you know now about Mortgage Coach, if you were recommending new loan officers who are getting in the business, should they use Mortgage Coach? And what are your thoughts do you wish you would have implemented Mortgage Coach a little sooner, knowing what you know today?
Yeah, I think it would have helped us quite a bit, actually. I mean, I think the answer to that is yes. I think that, listen, there's a lot of tools out there right now. And, Dave, I think that I think there's a lot of loan officers that are using more tools than they need to use. I think uh, some of them are just white noise. And I think if we would have been introduced to this, 5 years ago or 10 years ago, I think it would have been something that we would have embraced and probably, absolutely been using all along. Um, just because, for the simple reason that, it does so much work for you. I think there's a lot of this stuff that we've been articulating to our clients, but it does so much work for you and it helps leverage so many of these conversations, that I think that, it probably would have helped us get to the level we're at quicker had we embraced it sooner. But I'm just glad we're doing it now. And we have some great opportunities to kind of expand on that. And, so, we'll see what it can do in this next year.
Well, for all you new loan officers or even existing loan officers that says, I think people are using too many pieces of technology. I think, first of all, that's a true statement. And I think also people hide behind technology. But when you're making decisions around technology, I just believe where the magic is when you can take technology and you can take sales and marketing strategy, and those two things together create tangible value for a consumer. Like at the end of the day, it's all about tangible value for a consumer. And when a consumer can make a better decision, that's tangible value. When it saves a client time, that's tangible value. When it can help them make a better decision, that's tangible value. And so if you're using tech and sales and marketing strategy and it's doing that, then it's a win. And if it's just making noise and it's not driving ROI, then you're hiding behind tech. Last question. Any other advice you give to any new loan officers? A lot of new loan officers coming into the business, and some of them are like next gen. They're young, and it's coming out of college and getting the mortgage business. And then I've been interviewing a lot of folks that, hey, this is their second or third career, and they're killing it. Now, obviously, 2020 was a kill it year. It's raining loans. But what advice do you have for any new loan officers coming into the business?
I would say that you need to spend more time working on your business than working in your business. And I know that that's something that we talk about, top producers talk about a lot, right? But I think because we've been so busy in the last year or so, and it's so easy to just immerse yourself in, the drudgery of the file work or, the prospecting and so on. But you need to take time to really understand platforms like Mortgage Coach, HomeBot, and others, and not just scratch the surface, but really, really build them out to make sure that you're using 100% of what they have to offer. And I just think too many loan officers don't work on their business. They come to work, they turn on their computer, their phone starts ringing, and they're off and running, and they don't have that block time to really focus on strategy and creativity and things that they need to do to get to, accomplish their goals. So that's probably the number one thing I would say.
Yeah. And just have that heart of a servant. You're here to create clients for life. If you do it, you can create generational wealth for yourself, and you can help hundreds, if not thousands of families along the way. So, hey, Terry, thank you you are a modern loan officer. You're an advisor. You're taking an app with a link. You're delivering advice with the link. It looks like we might be able to get you to use a little more video. Is that fair enough to say? Maybe 2021 we'll maybe create a few more videos.
We'll see.
or get the team to do it. Well, we'll talk offline on that. But you are a modern mortgage originator, and I'm honored to have you on the team. And thank you for making time today.
All right. Thanks for having me, Dave.
All right. Take care, everybody. If you got value from this, give it a like, share it with your mortgage friends. All right.